Hello traders, welcome back to my YouTube channel. This is LFS Coach, and in this video I'll be sharing with you everything you need to know about the TDI indicator. Over time I realized that most people coming to my channel are really interested in how to use the TDI indicator strategy. Right, so I've prepared a presentation where I'll be showing you everything you need to know about the TDI indicator, from the overview, the structure, how to trade TDI and TDI trading strategy. If you are looking for a simple strategy then you need to watch this video to the end. If you are still struggling or trying to start forex trading, then you need to watch these videos to the end, because I'm going to teach you everything you need to know and you can get started with TDI indicator strategy after this video. So if you are interested in this video, kindly like, share and subscribe to this channel, guys. See you in our presentation. Bye. Welcome back, guys. So in this presentation we'll be discussing the Traders Dynamic Index Indicator, popularly called the TDI indicator. So this presentation is all about a trading strategy, and I will encourage you to watch this video to the end so that you learn everything you need to know about the TDI indicator. So what we are going to be discussing today is first the overview of TDI, and then we'll talk about the benefits and the disadvantage of TDI indicator. We'll talk about the structure, we'll talk about how to use the TDI indicator, and then we'll talk about the trading strategy around TDI, and lastly the key takeaways from the presentation. Right, so it is very important for you to watch this video to the end so that you get everything you need to know about this TDI indicator. Okay, so to the overview, what is TDI indicator? So TDI indicator is a component of RSI, moving average and Bollinger Band. So it's a combination of these three trading indicators, and that is why TDI is so powerful, right? So from your basic forex trading, I don't know where you started your trading journey from. So if you are new to forex, and I believe most people start forex trading with baby pips. So if you learn from baby pips, you will have seen trading indicator, and there are a lot of trading indicators that you can use to understand price action. Right, so TDI combines both leading and lagging indicators together, and that is why TDI is so powerful. And what is the purpose of TDI? TDI helps you to identify the market trend, help you to determine the volatility in the market, and it helps you to see the momentum in the market all in one chart. Right, so that is why TDI is so powerful, because it gives you a lot of information at glance. All right, because like I mentioned earlier, is a combination of both leading and lagging indicator. So as such, you have a lot of information that you get from TDI. All right, so TDI is developed by Dean Malone. I don't know if I pronounced that well. So, and is a combination of several indicators, just like I mentioned. And TDI is popularly with those that are using the beat the market maker trading strategies. That is where I actually learned about TDI first. And so many people that are trading ICT, the inner circle trader, they also use the TDI. I think more they are called smart money concepts now. I think they are the same thing for me. So, but that is not why we are here. We are here to talk about TDI. So that is basically the overview of TDI indicator. So now let's talk about the pros and the cons of TDI. Number one, the very first advantage is that it combines multiple indicators. And if you remember, I mentioned that it's a combination of both leading and lagging indicators. So, yeah, so it's a combination of multiple indicators into one. And it is very easy to read and interpret. That is when you gain mastery of it, then it is very simple for you to read and interpret what is happening in the price action. And it works across different time frame and market condition. And I can assure you, just like we have Bonija band, so in the TDI, then you can determine when there is low liquidity, low momentum in the market, when there is high momentum. You can see that with your Bollinger Band. Okay, and that is why the TDI is so powerful. And sometimes you don't even need to do a top-down analysis, switch between time frames. If you stick to one time frame and you master TDI very well, I think you will do well because it has a lot of information. Also, reading the long time trend in the market. I will show you all of that when we start seeing the TDI indicator. And lastly, it helps you to identify the direction of the market. When there is potential reversal, you can see the momentum and you can see volatility simultaneously, just like I mentioned earlier. So you can see all this information just looking at just looking at the TDI indicator. And what are the disadvantage of TDI indicator? Just like the disadvantage of every indicator out there. So lagging indicator, just like I said, this lagging indicator means the market will have moved before the indicator will give you a signal for you to buy or for you to sell, depending on the market condition. So this is a general limitation to all indicators, but so which means it might generate a late signal. Then should not be used in isolation, which means you don't trade based on TDI alone. I emphasize on this mostly in all my videos, that you don't use TDI alone. You use it with any other form of analysis. Also, you require practice to interpret correctly. So you need to practice TDI over time, check the chart, look at what is happening, and then from there, TDI will become very easy for you to read and interpret. So now we are going to the next part of the video where I'll be explaining the structure of TDI to you. So when I talk about the structure of TDI, we'll be looking at each component, the moving average, the Bollinger Band, and the RSI. Okay. So as you can see in the picture on your screen right now, you can see the upper Bollinger Band, you can see the lower Bollinger Band, which is the blue Bollinger Band on the screen, and then you can see the yellow market baseline, okay, which represents the long time trend in the market, and you can see your RSI price line and the signal line. So in the next slides, I'm going to be showing you each and every component one after the other so that you can see the build up of TDI structure. Okay, so I'm not going to just install everything at the same time. It's going to be one after the other so that you can see the structure and it all makes sense when I start to share with you different strategy that you can use the TDI for. So when it comes to the component of the TDI, we have the green price line, which measures the strength and momentum of price movement. So the green line is your RSI price line, which measures how the strength and the momentum in the price is. Okay, and the second component is the red signal line. So the signal line is just your normal moving average crossover. Okay, you know the slow moving average, the fast moving average will need to cross the slow moving average for you to have a signal. So that is basically the essence of the red line. And then we have the yellow market baseline, which represents the overall market direction. So more like the long time trend in the market. And remember I said just looking at TDI, you can determine the trend on higher time frame, and that is the reason why you can stick to a single time frame and still make some reasonable trade. Okay, and the last component is the volatility band, also called the Bollinger Band, right? Which is represented by the blue lines. So it indicates the market volatility. So you can see when the market when there is kind of consolidation in the market and when the market is expanding. the volatility line will show you that. Okay, so I will also give you enough examples in this presentation, so make sure you watch this video to the end. And so remember, your RSI is made up of level 68, which is the upper level, also called the buying exhaustion or overbought condition. Okay, so if you see the market trading at level 68, level 70, you know that the market is overbought and you are expecting the market to sell. Okay, and level 50 is the midpoint. Okay, and level 32 is the lower level, also the selling exhaustion, where you believe that the market is oversold and you expect the market to buy. Okay, so I don't believe you should have any issue regarding this. If there is any confusion here, I'm going to attach a video where you can set up all these components on your mobile phone and on your laptop. Okay, so when you watch the video, it all makes sense to you. Okay, if you are new, if you are entirely new to trading or you are new to TDI, yeah, there might be some confusion, but if you watch the video that I'm talking about, then it all makes sense. Also, as I go on the slides, you will understand all these details. That is why it is very important for you to watch this video till the very end. So let's talk about each of this structure one after the other. So the very first one that we have here is the RSI price line, which is the green line. Now look at how it looks. We installed the RSI, we have our level 68, we have our level 50 midpoint, we have our level 32. Okay, so remember, level 32 is the exhaustion, the oversold period. The level 68 is the overbought period. Okay, we have our midpoint. So it is assumed that when the price line is above this 50, is a positive sentiment. You only take buy trade. It is said that the market is in an uptrend. So if the price line is below the level 50, it is assumed that is a negative sentiment. The market is selling and you should only take a sell trade. I hope that is clear enough. All right. So, and one thing that you can see is that the market is bouncing up from level 68 down to level 32, bounce from level 50 down to level 32, and then back to level 68. So you can see how the price line keeps moving, keeps moving. Okay. And so it gives you information about the price action. So you can see when the market is overbought, you can see when the market is oversold, you can see when the market is in continuation. Okay, because if the price is bouncing up from level 50 like we have here, is a sign of continuation. Okay, so let's go to the next component. Now the next component is the red signal line. Remember I said the red is the signal line. It basically works as your crossover. If you are used to moving average crossover, then this should not be an issue for you. So from my left to my right, you can see that we have this crossover right here, the green RSI price line crossing into the signal line here. Okay, so which is a signal for a sell. Remember, so if you read the hint, green line greater than red line, consider a long entry or a short exit. So when the green line is crossing above the red line, it's a signal for a buy or you close your sell. If the green line is crossing into and is below the red line, is a sell entry or you close your buy. Okay, so it's as simple as that. It's a very simple signal. It's a very simple illustration. So looking at the charts, you can see the market is moving again from the overbought period back to the oversold period, bouncing off from level 50, then bouncing off from the oversold period back to overbought period. So this is how you interpret both the RSI line, the green line, and then the red line. So let's go to the next component. So now the next component is the yellow market baseline, right? So the yellow line is called the market baseline, which represents the overall market trend. And you can see the yellow trend line trends in a single direction more than both the green and the red moving average. So these three components now are moving averages that you install on your TDI. All right, but you see that the yellow moving average is the 32 moving average, which in its computation consider about 32 past candles before coming up with the current trend, which gives you a long time trend into the market compared to what the green price line and the red signal line is showing you, if that makes sense to you. Right, so you can see the yellow line can also bounce up from both the overbought period and the oversold period. Right, so it is said again that when the yellow moving average is trending above the level 50, it is an uptrend. If it's trending below level 50, it is a downtrend, and then you pick only sell or only buy based on what the trend is. So again, when the green is above the yellow and the yellow is flat or is trending up, consider only a buy trade. And as you can see from the small picture right there, you can see that the market is bouncing up from the yellow point, okay, and level 50, which is a sign of continuation. So you need to master this. I have another several examples that I'm going to show you. So you can see the market is bouncing up, the yellow line is trending up, and then the green line is also crossing the red signal line from below, which is a sign for a buy, especially if the market is coming from oversold period. So this is a sign of continuation into the trend. Right, so I believe that is clear enough. But the more you see more examples, the more you understand, and the more you practice, the more you understand all this. So again, as I said, you can see that the market baseline is moving from the level 68 down to level 32, back to level 38 to 32. So this is to tell you that the yellow line also shows some level of overbought and oversold. And if you see this market baseline around this level, it's telling you that the market is in for a long ride, because remember that the market baseline shows the long time trend in the market, right? So if the market is bouncing off from level 32, you know that you will continue to take several buy trades until it gets to level 68, okay? And if it's bouncing from level 68 down to 32, you take several sell trade back to level 32. I hope that is clear as well. So now to the last component, which is the volatility band, which is the blue line that you can see here. Remember I said we have the upper band and we have the lower band. So one thing that the volatility band shows us is the market sentiment. So it shows us when the market is weak, and it shows us where the market is when the market has some strength. Okay, so for instance, you can see this part where there is squeeze. This is what we call squeeze, where the Bollinger Band is so narrow. Okay, if the Bollinger Band is so narrow, if you check your price, you will see that the market is just ranging or consolidating, whatever you want to call it. Okay, so the Bollinger Band will squeeze, and you will know that there is no momentum in the market. And when you see such, you should know that a breakout is coming, most especially if you are trading on gold, and you see that your TDI is squeezing, the Bollinger Band is so narrow. All of a sudden, you will see that the Bollinger Band will start to widen up, widen up, widen up, and that is when momentum and volume is coming into the market. And just like as you can see here, this is how you interpret your Bollinger Band to see the momentum and the volatility in the market. And again, when the green line moves out of this blue line, it is called a hook or shark fin. I have several videos on how to trade shark fins. I'm also going to show you some examples on this slide, and I'm going to attach the video to the description. All right, so let's move to the next. So again, you can see what is called the volatility band squeeze. You can see how the band is squeezing here. It's so narrow. It's so narrow. So if you check the price chart at this time, the market will just be consolidating and ranging all of a sudden you will see a breakout. It might break to the upside, it might break to the downside. So if you trade breakout, if your strategy is breakout trading, then you need to pay attention to volatility band squeeze. When the volatility band squeeze, then you should expect a breakout. And then the second picture here is the TDI hook. So the TDI hook is when the green price line, move out of the bonita band entirely and then re-enters into the band. Okay, so that is what we call shark fin or hook, whatever you want to call it. Okay, so this is important for you to trade reversal. It's so important if you want to trade reversal. So I'm going to show you several examples. These are just images for you to understand it, see several things that you can see when you are using your TDI and how you can interpret them. So now we are going to another segment on how to use TDI indicator. So now, how do you use this TDI indicator? So first, you can use TDI to spot divergence. This is one of the powerful tools that you can use to spot divergence. I can assure you that before 70 to 80% of the time, before a market will reverse, there will be a divergence. I can assure you, you just need to pay attention to it. So there are several types of divergence. I'm just only going to be specific about this type when the chart is making higher highs in this case, and your TDI is making a lower low. So this is what we call divergence. And it is very important for you to know how to use TDI to spot divergence, especially if you trade reversal. So trend cannot continue, moving up or moving down in a single direction. There will always be time where the market is going to reverse, and before a reversal, there will maybe 70 to 80% of time there will be a divergence that will signal to you that this market is going to diverge. Okay, so and what is divergence? So divergence occurs when TDI price and price action move in opposite direction. Just as you can see in this picture right here, you can see that the chart is clearly giving us a higher high while the TDI is showing us a lower low. I have a video on this as well. I'm going to attach it to the description. So if you are entirely new to forex trading, then you need to see that video so that you understand what divergence is very well. But if you are not new to trading, then you can just go with this explanation. So why does divergence matters, or why is TDI very important in spotting divergence? So because it gives you a trading opportunity and a potential reversal entry. Okay, so basically this is what I look out for when the market is just pushing up, and I want to trade the reversal. I wait as much as I can until I see a divergence before I come into the market. And again, remember, when the chart is doing that, just in this instance, the market is making higher highs and our TDI is making a lower low. That is a reversal into a downtrend. If it is a reversal to the uptrend, the chart will be doing a lower low, while the TDI will be doing higher highs. Sorry, higher lows. Okay, if you see that, that means the market is about to reverse. Again, so the second how to use TDI indicator is also to spot stop loss. Okay, and this is what I call the shark fin. So in most cases where you have support and resistance, so this is where the smart money concept believes that the institution comes in to stop your to 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 trigger your stops and then move in your direction. Okay, so the market is on a support level and you place a buy, and they know that your stops is going to be just below the, I don't know how you draw your rectangle to show the support level. Okay, but they know where your stops are, so they just do a very sharp movement to stop you out of the market and then move to the upside. And then you be like, oh yeah, I know the market is going to buy, maybe my stop loss is too tight or whatever. your stop loss is not too tight, you are supposed to wait for a TDI Sharkfin before you enter the market. It's just as simple as that. And remember, TDI Sharkfin is when the green signal, the green price line moves out of the Bollinger Band and then comes back in. Okay, so when you see that, that is your signal to buy in the market. Okay, and the same thing goes to if the market is on a resistance level and you see a shark fin, it is time for you to sell. Okay, most times when you see the market on popular zone like support and resistance, demand and supply, always, most of the time, wait for your shark fin before you enter the market, because they will have stop out most of the retail trade, and then you can go with the smart money. I don't know. I don't use smart money concept like that. So, but this is the explanation. Okay. Again, I mentioned this earlier that you can use the volatility band to spot the volatility in the market. Okay, when there is squeeze that the Bonita band is so narrow, okay, it means that there's no volatility, low volatility in the market. And if you trade breakout, you can just identify the high and the low where the market is getting, just like I have here. Place your buy stop and your sell stop and wait for the market to break out. I don't know if you trade breakout, you can do that. But my point is, TDI is so effective to show you when there is low volatility in the market and when there is high volatility. So as you can see, when the high volatility starts to come in, the volatility band continues to widen rather. Do you get? So that is how it works. So when the volatility is low, the band will be so narrow, and when the volatility is high, it will widen up. Okay, so you expect that the more you trade, the more you study TDI, and you can see all this information just using TDI. Remember, volatility squeeze, this is when the band contrasts, okay, and signal low volatility and potential breaker. So when you see that there is TDI squeeze, you just need to wait for breakout, and when it expands, then you can start trading. And so the fourth point on how to use TDI is the TDI crossover. Just like I said, the signal line, you wait for the price line to cross into the signal line and give you an entry. So you can use this to as a strategy for your entry and exit. So when the signal line is crossing from the level 32, that's a buy signal, and when it's crossing down from level 68, you close your entry or you enter for a sell. Okay, so that is TDI crossover. When the green line is above the red line, that's a buy signal, and when the green line is below the red line, that is a sell signal. So it depends on how you want to use the TDI indicator. And I said here that the TDI is more than just a trend indicator. It also shows you the market psychology, shows you the momentum, it shows you the volatility in the market, which helps you to see the market in a different way. Remember, it's a combination of three different indicators, right? Which means it's so powerful and giving you different information at the same time. Okay, and again, make sure you are using this crossover with another confluence. Okay, remember, maybe you see the market just like I have on this chart now. There is a trend line and you see the market on the touch, and you see that your TDI is crossing over. Then that is enough for you to decide on an entry into the market. So you can also use TDI to determine your entry and your exit from the market, but make sure you are using it in line with a confluence. In this case, trend line, it might be Fibonacci retracement. I have some examples that I'm going to show you, and that is why I keep saying make sure you watch this video to the end. So this is the part where we now talk about TDI indicator strategies. So what are the potential strategy you can use using TDI? So this is the latest chart. I just got this from my MT4. Okay, so as you can see from my left to my right, you can see this shark fin coming up here. Remember, I said shark fin is when the green line move out of the Bollinger Band and then cross back in. Okay, as you can see here is a potential buy, and you can see how the market move up after that signal. And again, you can see this one that is pointing for a sell. When the green line move out of the Bollinger Band and then comes back in, you can see it's also signify a sell signal. So again, you can use Sharkfin as a setup. Basically, I have several videos. So again, when I was using only Sharkfin on 30 minutes, then but it must be supported by a supply and demand zone. So if I see Sharkfin and there is supply and demand, then I'm going in for that trade. Okay, so this is one of the trading strategy that you can use with TDI. Now, this is a combination. Like I said, you need confluence when you are trading. So this is Fibonacci and Sharkfin setup. So you can see all I need to do is just to mark from the high to the low and mark my level 15 and 61. Wait for the market to retrace back to this level, and I pick my sell. And you can see there's a Sharkfin here where the green move out of the um Bollinger Band, okay, and then cross back in, and that is our signal for a sell. So all I need to do is just to wait for this market to give me my shark fin at my point of interest, and I'm into the market. Remember what I said, that sometimes you just need this crossover as your entry rule into the market. You can see it gives you a very simple trade signal in this case. Just you understanding the analysis you need to do and then using your TDI as your entry confirmation and exit. So let's go to the next strategy. So the next one is the market baseline continuation setup. Okay. Remember I said sometimes the market baseline, which is the yellow moving average, move from level 32 back to 68, then 68 down to 32 again. So as you can see on this chart, it started moving from level 32, okay, and up to crossing above level 50. Remember I said again that if the market baseline is above 50, is a signal for a buy. So I was able to identify this three step: level one, the level two, and level three on this trend line, okay. And the market is also bouncing off from the yellow moving average at level 50. Okay, this is a sign of continuation. I mentioned this at the beginning of the when I was showing you singular line, that you can use market the line also for continuation. Sorry, so you can see you can draw your trend line and use TDI to interpret if the market is still going to continue in that particular trend. So I believe you can spot this kind of setup once you know how to do your analysis. This is an uptrend. Clearly the market is coming from 32 going to 68, is that's already crossed the 50 midpoint for RSI, okay, which is a good sign that the market is still going to trend up, and then we have our trade signal. So again, make sure you are doing confluence with it. So in this case we have a trend line and the market baseline continuation. So divergence setup. Remember, so this is also a case for a sell. You can see that the chart is doing higher highs and our TDI is showing a lower low. So that is a signal for a sell. That is a sell setup. And so you can use your TDI. You can use your TDI to spot divergence. So let's look at the next setup. So the next setup is also the divergence and market baseline continuation setup. So if you see this divergence, for instance, which is a sign for a sell, okay, and let's say you missed this first drop, for instance, the market move back and from level. This is more like a market baseline continuation again. As you can see, it's bouncing up from level 60. Okay, sorry, level 50, the RSI midpoint, okay, before continuing into the sell, just like what I showed you here, what we have here. So bouncing from 50 and continue upside. So this is also divergence and bouncing from 50 and continue down. And you can see that the RSI, so the moving average, the market baseline moving average is coming from 68, which means the market is trending down. So the market is trending down. Again, if you even draw, um, if you look at this change of character here, you will see that the support is turning to resistance at this point, and then we have this. So you can do all sort of analysis, all sort of analysis. I'm not here to convince you, but just for you to see how simple you can use the TDI indicator to spot trading opportunity. So, what are the key takeaways from all this trading strategy, the structure, how to trade TDI that I've shown you? So, the first one is you use TDI on higher time frame. For a start, for more accurate signal, I can assure you that you get accurate signal. Just that it will be very you will not get too much signals, but you are going to get high profitable signal. Okay, using TDI on higher time frame. So don't even, I've not traded. I've been trading TDI now since 2019, and I've not traded TDI on 5 minutes before. Okay, so don't say you want to go to 5 minutes, 15 minutes for now. At least stay at 30 minutes to 4 hours. Don't go below 15 minutes, please, until maybe you have mastered it. Then you can go to lower time frame, maybe 15 minutes, 10 no 5 minutes, or 1 minute. I don't know, whichever one you use. Okay, but make sure you have mastered it. So but when you start with higher time frame, you gain mastery of it. The RSI, the TDI will be neater. Okay, it will be neater compared to lower time frame. So from your understanding of what you've learned from higher time frame, then you can apply it to lower time frame, and then combine with price action. As I've shown you, I use Fibonacci, I use support and resistance, I use trend line, I use price action to support my entry. Okay, so don't just use TDI alone. Make sure there is a confluence, because it gives you more confidence if there's confluence when you are trading. Okay, and then avoid trading in a choppy or flat market. Again, remember when I said the Bollinger Band will show you, when the Bollinger Band is narrow, it's going to show you that the volatility is so low. Don't trade during this period. Only if you trade breakout. Okay, if you don't trade breakout, then stay off the market. Wait for the volatility is widening enough, for you to see volatility in the market before you trade. Just a piece of advice. Okay. So now the next takeaway is TDI is a very powerful tool for you to spot trend, momentum, and volatility in the market. Okay, stick to that. Make sure you are using TDI to spot trend, to determine momentum, to determine volatility. Okay, and effectively, when you use proper risk management and trading strategy. So make sure that when you're using TDI, you are using it with proper risk management. Okay, don't just open your position. Make sure you use your stop, make sure you use your take profit. I'm going to add videos on how I trade with TDI into the description. Make sure you watch it. Okay, and the last one here is continue practice and back test. So the more you use TDI, the more you understand how it works. And I hope this video has been very helpful to clarify everything you need to know about TDI. I'm just going to brush through this strategy again, so that you will see how to use TDI. So TDI indicator strategy, you can see how to use Sharkfin. You can see it. I already identified the buy setup with the green and the red setup with the red. You can see how it looks for you to determine either it's a buy or it's a sell. Also, you can screenshot and see what is happening in the market. Okay, then I use it with Fibonacci. I have several videos on how to use Fibonacci and TDI. Sometimes I use Fibonacci on 4 hours. I go to 15 minutes to look for TDI Sharkfin for my entry. I'm going to attach the video. Make sure you watch it and learn from it as well. So this is how it works too. And trend line and TDI. So you can also combine trend line and TDI together to pick a good trade. And divergence, you can also use divergence to spot. You can use TDI to spot divergence, and you can also use to spot continuation. Okay, so that's basically it. So thank you if you have watched this video for till this moment, I think you need to give me a thumbs up. All right. So I believe um, the more you practice, the more you understand how to effectively use TDI and understand how it works. So this presentation will also be available. If you need it, just send me an email, then I'll forward the presentation to you. Okay, guys, I hope you are able to learn one or two things from this video. See you on another video. Cheers, guys.